Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Bitcoin is trading around 66,190 USD, pulling back after reaching a high of around 67,293. This level coincided with the upper bound of the uptrend channel, where Bitcoin encountered strong resistance, and we now expect it to continue falling in the coming hours. If Bitcoin rebounds above 66k in the coming hours, we could expect it attempt to test the strong resistance at 67,300 USD again. This level could offer an opportunity to reopen short positions, with the nearest targets at the 21 SMA around 64,758. Ultimately, we could expect BTC to reach the lower bound of the uptrend channel around 63,500k. Bitcoin is expected to trade between a high of 67,300 USD and a low of 63k in the coming days. This range could allow us to look for opportunities to buy and sell. A good idea could be waiting for Bitcoin to reach support at around 64,800 USD, a level that coincides with the 21 SMA. It's a sign line on a graphic, and could allow us to reopen long positions. Following a relief from the downward pressure, as observed on the H4 charts, since the Eagle indicator has reached extremely overbought levels, we could buy again. A decisive break below the downtrend channel could accelerate Bitcoin's bearish cycle, and we could expect it to retest the psychological level of 60k. And potentially even reach the -1.8 mirror level, around 59,375. On the daily timeframe, Ethereum remains firmly locked in a bearish trend structure. The key CHOCH level is now located at 2477, marking the latest lower high within the current downtrend. As long as Ethereum continues trading below that level, the broader bearish bias remains intact, and there is no technical basis for calling a trend reversal. Price recently reacted with only a minor deviation to the latest bearish fair value gap, a setup that closely mirrored the signal seen on Bitcoin. The alignment between the two largest cryptocurrencies provided additional confirmation that sellers remained in control. As a result, traders had a strong technical case for initiating short positions ahead of the most recent sell-off. The rejection from the bearish FVG combined with the intact bearish market structure offered a high probability continuation setup that ultimately played out as expected. For now, Ethereum continues to trade below key structural resistance, and the daily chart remains titled in favor of the bears until proven otherwise. On the 4-hour timeframe, Ethereum continues to trade within a bearish structure, which remains part of the broader downtrend visible on both the daily and weekly charts. At the moment, the market is showing only a modest corrective rebound. And while that recovery could extend further, there is still little evidence of a meaningful shift in trend. The most recent bullish fair value gap did generate a reaction. But as the price action shows, the bounce has been relatively weak. That's a classic characteristics of a bearish market. Sharp declines by followed sluggish and limited recoveries. In other words, sellers continue to dominate the broader picture, while buyers have so far failed to generate enough momentum to challenge key resistance levels. As a result, traders may consider tactical long positions when fresh bullish patterns or setups emerged on the 4-hour chart. However, these trades should be viewed as short-term counter-trend opportunities rather than the beginning of a larger bullish move. The prevailing trend remains bearish, and Ethereum could resume its decline at any time as long as the higher timeframe structure stays intact. Until the market starts producing stronger bullish signals and reclaiming key structural levels, rallies are likely to be treated as corrective moves within a broader downtrend. That's all for today. See you online soon, and good luck.